Oh, hello there. Welcome back to Rainbow Investing. So you might be wondering why I'm having a drink on the show tonight. Well, there's a very good reason, and it's because my channel, Rainbow Investing, has just surpassed 1,000 subscribers for the first time. So a big, massive thank you to everyone out there who's supporting the channel, who's subscribed to the channel so far. Really means a lot to me. Hitting this milestone really means a lot to me. So it's with a very thankful heart that I very much appreciate you tuning into this video tonight to celebrate 1,000 subscribers. Now, I have a very special surprise for all the viewers tonight in celebration of my channel's milestone, and it is that I'll be revealing my entire investment portfolio and how I invest my own money. Now, I'd just like to preface this by saying this is how I manage my money. I am not recommending anyone do anything based on tonight's video. This is what works for me and my investment strategy and my investing goals. It probably won't work for anyone else in quite the same way. So I do not recommend you do anything in this video to change your own investing strategy if you have one. But saying that, I would like to demonstrate exactly how I invest money so you guys can kind of see how I put my money where my mouth is, so to speak. So without further ado, let's dive in a bit. So as you can see here, I've included my entire investment portfolio with just the monetary amounts blurred out for obvious privacy reasons. So before I talk about the kind of investments I have, I'd just like to show you a little diagram of the process that I like to go through when I am thinking about what money I'd like to invest. So as you can see, I've just pulled up a little flow chart here. It just demonstrates what I'd like to do with my cash. So when I have enough cash that I can put in my investment account, this is the kind of allocations that I'll usually be thinking about. So for starters, I always like to have between 5 and 30% of my portfolio in cash at any one time, depending on how I'm feeling about the current market environment. So if I'm feeling that the stock market is very high at the moment, it's overvalued, I'll generally like to put more of my portfolio in cash. But if I feel like there's a lot of bargains around, that the stock market maybe has just had a crash or a correction, then that's when I'll start getting towards the lower end of that cash allocation. But once I'm comfortable with my cash position, I generally like to pour my portfolio's capital into one of 4 different areas. So these are the portfolios I call my growth portfolio, my dividend portfolio, my high conviction portfolio, and my hedge portfolio. And each of these names kind of gives you a rough indication of what kind of investments I'm putting this money into. So as you can see, I try and strive for 30% of my overall portfolio in each of these 3 big portfolio buckets, and then the hedge portfolio is a smaller 10% chunk. So just a quick breakdown, what I normally like to put in the growth portfolio are a hands-off asset. So that might be mutual funds, managed funds, ETFs, investments that I really don't have to think too much about, that I trust the management to look after my capital with very little input from me. This section of my portfolio is more on autopilot, and it gives me peace of mind because if the stocks that I'm investing in on my own steam, if they don't work out so well, I've at least got other fund managers who are looking after a certain portion of my money. Now, the dividend portfolio is fairly self-explanatory. I like to invest in dividend-paying stocks in this particular portfolio, stocks that pay me a recurring passive income that I can then use to invest in other investments of my choice. And the high conviction portfolio is generally where I have my biggest ideas, my ideas that I have the most faith conviction in. It's normally my riskiest part of my portfolio. Just housing stocks that may or may not work out really well or may not work out at all. And last but not least is my hedge portfolio, where I invest in alternative assets that might not be directly correlated to the performance of the share market, but still have the potential to give me a good long-term return. So let's get into it. So here's my portfolio revealed in all its glory. Now, as you can see, I've divided the four portfolio buckets across different sections here. So this section I've got the growth portfolio, in this section I've got the dividend portfolio, in this section I've got the high conviction portfolio, and in this section the hedge portfolio. At the bottom here, I have each portfolio's weightings, my target for that particular portfolio, and in my real portfolio, of course, all these squares are filled in, but I've taken the liberty of removing them just for this video. As I said before, just for privacy reasons. And just remember, if you like the layout of what I'm showing you here, this is almost an exact replica of the Excel portfolio I use for my everyday investing. So if you want an idea of how I construct this sort of template using Microsoft Excel, I've got many videos on this topic that you can check out another time. But let's just get straight into it. So, with my growth portfolio, you can see I have a collection of managed funds or mutual funds, listed investment companies, and ETFs. So we have a couple of managed funds covering very vast chunks of the investing landscape. So we have an emerging markets fund, a small companies fund, and some other investments that I have a great deal of faith in the managers that they will look after my money with great aplomb. Okay, so moving on to the dividend portfolio. This represents a selection of dividend-paying shares that I have in my portfolio. We do have a mixture of Australian dividend stocks and some US dividend stocks, as well as a couple of high-yield ETFs. Now, as the more eagle-eyed viewers out there may notice, I do have a couple of ETFs and listed investment companies in here, but they are in my dividend portfolio because I invest in them primarily for dividends. So, as you can see, I have a Vanguard dividend ETF and a couple of listed investment companies as well. Now, you might also notice that I have a US dividend stocks tab here. I actually have a collection of US dividend paying stocks that I've constructed to try and replicate what a US dividend ETF might look like, just to save me those fees. It was a little project of mine. So under this category, I have companies like 3M, Coca-Cola, American Express, and some other ones that have a really good track record and history of long and growing dividend payments over time. If this is something you guys would like me to dive deeper into, let me know in the comments and I'll see if I can make a video about it at a future point. But that's basically my dividend portfolio in a nutshell. Now, moving on to the high conviction portfolio, this is where I have, as I said earlier, some of my high growth plays and high conviction plays. So as you can see, I have companies like Tesla, Lemonade, Coinbase, Alphabet, Visa, Cloudflare, you name it, it's all here, you can see it. Now, these are the companies that perhaps might not pay a dividend, but even so, I, as an investor, have great faith in their future, and they remain part of my high conviction portfolio that will hopefully deliver me some outsized returns in the years ahead. Now, just to finish off, let's discuss my hedge portfolio. So as you can see, I have a collection of precious metal ETFs, an Australian gold miner, and some cryptocurrencies in this portfolio. Now, I mainly use the hedge portfolio to balance out the other three portfolios. So assets like cryptocurrencies and gold have some characteristics that shares often can't match, such as inflation protection, scarcity, that kind of thing. And this is why I use this portfolio. It's more of an insurance portfolio than anything else. It helps me sleep a little better at night knowing my assets are more diversified across more asset classes, and that's where my hedge portfolio comes in. Now, going down the bottom here, you can see that the portfolios currently are roughly within their target allocation bands, but there's still some adjusting I can do. So over time, as I feed more capital into the portfolio, I will normally allocate the capital into the portfolio that's most outside its target band. And then I'll keep doing that, and the portfolios will just sort of balance themselves out over time. That's the idea anyway. Alright guys, that's all I have for you tonight. Thanks so much for watching. I really appreciate it. I just thought I'd do this video just to sort of give back a little to my growing community. And I'd just like to say one more time, thank you so much for watching and being part of my channel. I really do appreciate it. If you guys have any ideas about videos you'd like to see from me in the future, or maybe even videos that you've liked of mine in the past, just leave a comment, let me know. I'd love to have a read of what you guys think. But anyway, that's all I have for now. Thank you so much for watching, guys. Once again, I do really appreciate it. Hope you all have a wonderful evening. Take care and good night.